What's going on, everyone? In this video, we're going to talk about what the NASDAQ 100, right? That's the biggest tech stocks that are out there. You know, predominantly the stocks that I trade, I only trade a handful of stocks in the NASDAQ 100 as well as trading the NASDAQ futures. So predominantly that's what I'm going to be focused on, right? A lot of the time, those of you guys who are in Evolution Traders, you guys know that I'm focused on the NQ. You guys know that I focus on Tesla, AMD, NVIDIA, Apple, those type of names. So let's kind of look and digest exactly what happened this week, right? So if we kind of go back, we hit a little bit of a bottom this week, right? So what we're looking at here is the daily chart. And if you kind of go back to 3 days ago when we really took out the 26 lows, we put in this nice washout and then immediately started to get bought back up. Now, if you look at the 28th, which was yesterday's price action, right? So if you look at the 28th, not only did we reconfirm the 5-day moving average, but we got back into this range and it was a nice aggressive kind of easy day, right? So a lot of you guys, if you didn't make money yesterday, you got to really backtest and start analyzing your strategy or analyzing your emotions or your mindset, because yesterday was a pretty easy day. Now, we had a bit of a gap up today, and one thing that I was kind of trying to explain a little bit to my traders this morning was I particularly don't like gap ups, right? I don't like gap ups. Now, a lot of newer traders, especially when you first start trading, you're looking at the futures market overnight in the pre-market and you see it green and you get happy, right? You think that, futures are green, we're going to continue to go higher all day. And what happens in that first 30 minutes to an hour, it gets stuffed off the gap up and kind of just fades the rest of the day. That's essentially what kind of happened today. We had that initial gap up and then we faded, right? So if you look at where we kind of stood today, we did break over the 10-day moving average, which is this blue line here, and then we got rejected and we started to fade. Now this candle I don't really like that much, and the reason why I don't like it is because coming off of an exhaustion move here, this is a nice little dead cat bounce that we had, but it wasn't even like a 50% retracement. It was more so of like a 30% retracement, a little bit of a 3-day dead cat bounce. One thing that I'm really going to be focusing on going into next week is going to be the loss of today's lows. Because if we do lose today's lows, and that price I'm going to give it to you right now is around 14,807. If we do start to lose that, it's going to be a clear shot down here to this lower Bollinger Band and Thursday's wick, which is sitting here at around 661. So you can ultimately see that we have about 150 to 200 points worth of downwards pressure that could be eaten up very, very quickly. Now, the big level that I want you guys to focus on is going to be the wick from the 26th, right? So let me just verify the 26th. If we look at this, or 27th, excuse me, if we look at the wick from September 27th, we're sitting at around 585. Now on this daily chart, we have nothing but airspace until we get to the 150-day simple moving average, and that's sitting at 14,283. So we could potentially be looking at anywhere between a $200 and $500 decline over the next coming couple of weeks. Now, is it anything to be concerned about? No, because as a day trader, you can make money both long as well as short. But again, if you're a longer term investor, maybe you're a swing trader, maybe you only have success trading to the long side, you're going to need to really be cautious. Because in order for us to continue to push higher, we're going to have to get outside of this range. And that's taking out 15,060. That's only going to have room to 15,160, which is about 100 points up. And that's going to be met with some more supply zones. So we have a little bit of trouble to the upside, not saying that we can't continue to the upside, but in all honesty, in order for us to really get those continuous green days, we're going to need to get back over our 50-day moving average, which we lost. And you can see that first closure here going back to September 15th. So realistically, once we lost the 50-day moving average on September 15th, we traded sideways, and then it's just been a downwards movement ever since. I would really like to see us get back over 15,287 for us to really have any type of room to the upside, going, further to potentially, trying to test some of these recent highs. So my bias is still going to remain to the short side. If you kind of notice the daily candles here, since being below the 50-day moving average, our red candles are significantly larger than our green ones. Okay. Now we are having a little bit of rising volume as compared to the last red day. But if you kind of notice here, going from this little green day to this red day here, the volume started to pick up. And the only reason the volume is starting to pick up here is because sellers are getting tired. The true breakdown came here at around 15,353. So we're trading about 500 points down from the initial breakdown spot. So the farther you get away from the initial breakdown spot, the more exhaustion that happens with the sellers. You need a little bit of buyers to kind of step in and run the price up before you get that continued breath, right? So again, what I'm going to be looking for is a short side bias. You can kind of, if you're going to play to the long side, just make sure that you're thinking about scalping. You're not really trying to look for that all day move. Just get in, get green, and get out, right? And then you want to wait for those rejections. You want to wait for the low of day break through the Friday's lows here, which is sitting at around 14,810, somewhere around that area. That's my analysis going forward for next week. Again, I'll be a little bit more short bias until the bulls can prove that they can start to eat up some of this upper supply zones. Again, we're going to still need to rise 200, 300, 400 points before I'm really going to be backing the bulls. Until then, I'm going to have to go with the bears and continue to play to the short side, because that's where the money's being made right now, right? So different market cycles, attribute to different patterns and different ways that we're going to be able to make money. And right now, the majority of the money, besides yesterday, has been made to the short side. So with that being said, if you guys want to join with me and you want to trade with me each and every single day live, and perhaps you want to get in on the courses and how I use this chart, and you want to actually learn how to day trade on a little bit more of a consistent level, I've got a couple of lifetime spots open up. It's a one-time fee. That link is down in the description box below. Just choose the one-time payment option, and I'll get you guys all set up and in the room. Until next time, I'll see you guys all in the next video.